Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of June the 11th, 2018. Now to get started this week, we'll begin where we always do with the US dollar index. Now the dollar's had a tough week despite that good non-farm payroll number, but the major event risk going into this week will be, of course, the FOMC. Very likely the Fed is going to raise rates, so the dollar should recover here. The indicators from VantagePoint quite mixed. Now our low point from last week, we're looking at this, is coming in at or about 92.76, but a very mixed bag from VantagePoint here. We are breaking below the zero line in the predicted differences. In most cases, even after the Fed has hiked, the dollar has still come under selling pressure towards the middle of the month. So a buy the rumor, sell the fact cannot be ruled out here as leading up to the FOMC and their projections. But there's a lot of there's as many positives as there is for the US dollar index right now. There's just as many negatives here. Potential trade war, global trade war. We've got issues with the North Korean summit, whether it appears that it's going to take place, but all of these things are causing issues for the US dollar. So ultimately, we'll see if we can push below last week's previous low, but the indicators from VantagePoint are predominantly still negative. Now, when we look at gold going into this coming week, gold a major player in our Forex trading, stock trading alike. We've got significant VantagePoint resistance at the 1304 level here. Now, if this trade war heats up further, that could put a bid under gold, but right now there's very few buyers at gold anywhere near the 1304, 1308 area, repeatedly selling off. But the VantagePoint indicators are slightly positive on gold here, 51.9 on the predicted RSI, predicted MACD, and the MACD difference rising as are the predicted differences, and a positive neural index. So it will gold will be determined by a risk on or risk off environment. Right now, it's moderately risk on, but we'll see how things progress with the trade war, particularly between US and Canada. The equity markets next week, right now, coming into our next trading week here, we've got a top in place, what appears to be a top in place at 27.82. We're closing very strong on the week on the equity markets. I talked about this in last week's Forex Weekly Outlook, that if the dollar sinks, the equities will move higher. That's come to fruition. But we are moving into a very overbought condition on these equities. And in most cases, when the Fed hikes, it tends to put downward pressure on the stock. So we'll be watching it very closely with the VantagePoint indicators, but we are getting very toppy on the equity markets yet again. But the US economy absolutely moving along at a steady pace. That, of course, is helping oil contracts, in my respectful opinion. We have a good base formed here just above 64. We've just got to break through this key VantagePoint level in the 66.16 and 67.53. We push above that, we go higher. The medium term crossing the long term predicted difference. Fantastic signal here, counter trend signal off the base support level, and we've turned higher, but we're not out of the woods here yet. A lot of global trade imbalances, so we'll see how this one plays out. Right now, having somewhat of a negative effect on the US dollar and the euro, but again, after the G7 summit here in Canada over the weekend, I don't think it went particularly well for the countries. There's no real deal on the table just yet. The euro is capped out the week at 118.60. Buying dollars was a good play here, but we're starting to turn lower here. Again, going into that interest rate cycle, or the potential hike on Wednesday, that will likely put pressure on the euro yet again. So this could be it, but to begin the week, we want to see if we can push above 118.60, but be very cautious here, guys, of a bull trap setting up in this particular zone. Now, with US Swiss franc, we've had a breakdown below this massive support level here at 98.20, but we turned around on Friday and went back up. So our low point for the week last week, you can see that's turned into what I would call a double bottom right here. When we look at this, very important using price action that we can assess this. That low point here is coming in at or about the 97.90 area. So right now, the VantagePoint indicators are clearly turning positive again on this, but we must clear 98.85 to break higher to our next resistance zone at 99.80. I would say ahead of the FOMC, that is very likely, barring any major news again from the from the G7 summit, or if the trade war heats up, that could put a risk-off environment under this. Now, as we come into the British pound for next week, the British pound is absolutely, trying to break through this tight channel here. Our support level last week, we came in down here at or about the 132.80, 132.95 area. Nice little double bottom, but we're getting all tangled up in the VantagePoint critical 18-day predicted moving average at 134.11. We've pushed above it, but we're really struggling to close above this area. Now, if we can break through this channel here, get above 134.50, 135, particularly 135, if we can break that, then we're going higher on this pair. Probably a little premature prior to the Fed, but ultimately in the coming months, I do feel that this pair will extend higher. Now, with the dollar yen going into next week, we appear to have a top in place here at 110.40, but once again, the interest rate differential between the US and Japan heavily favors the US. It's just a question again, are we going into a trade war here? Yes, no, maybe. Very difficult to say. But the indicators are we've lost our momentum from somewhat of an overbought condition. We're starting to move lower here. But that key vantage point level, 109.66, we've closed just under it at 109.53. Be careful of a bear trap on this one. I think we're likely going to hold 108.80 this previous week's low here, and the buyers are likely to come in right around that particular area. We'll look for an indicator from VantagePoint to see if we can get a reversal signal here, but right now it's still predominantly bullish while the predicted differences are holding above that all-important zero line. Now, with our commodity currencies for next week, again, we've got this resistance zone on US Canada that I've basically talked about for the last 2 months. And we're just not breaking through this 130.50 area, 130.70. We keep coming up to that area. Canadian unemployment report was not very good on Friday at all, but there was significant wage growth, I think around 3.9% on the wage growth side. That helped make up for the significant job losses in Canada. We're sitting on the 129.17, the key VantagePoint 18-day predicted moving average. But the indicators are pointing that potentially we're going lower here, 46.6 on the RSI. But again, if we can break down through 129.17, that'll open the door back up to the 127.60 area. But again, we have to get through this 129.17, a clean break for at least 2 days in a row here, guys. We don't want to jump the gun too early because, again, this could be a bear trap, respecting what's going on globally. So just be careful. But if 129.17 holds, we're likely going to revisit the 130.50, maybe even the 131.45. But my optimism on that at this particular time remains heavily guarded. When we look at Aussie US and New Zealand US going into next week, guys, we've got a high in place at 76.85. Indicators from VantagePoint are clearly rolling over to the downside here as we're failing, but we're sitting on that key VantagePoint level is 75.76. We've managed to hold above it to close the week at 75.97. But a breakdown below that would trigger a move probably back into the mid 74 range here. The VantagePoint indicators are suggesting that is entirely possible at this particular time. So we're going to watch it very closely, but with the medium term crossing the predicted difference down, the only thing holding the Aussie US up right now is that key VP level at 75.76, excuse me. Now, when we look at New Zealand for next week, again, very, very similar currency pair here, 70.60, a very significant top coming in right around that particular area. And again, the key VantagePoint level just below that at 69.92. But the indicators here are also warning that we could be seeing some further downside here. So a lot of what we're going to see next week will not just depend on whether the Fed hikes, but the Fed projections as where the U.S. economy is going from here, how much this potential trade war could affect the U.S. So it's a very, very tricky week next week, but I'm sure if we're following these key levels here, we can all have a very, very good trading week. So with that said, this is the Forex Weekly Outlook for the week of June the 11th, 2018.